All right, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So doing the video a little late. It is Monday here. But you're going to see last week we did have a little bit of volatility, although ultimately markets were able to shrug that off and close higher again. I believe that's now 13 out of 14 of the last 14 weeks. I think we had 13 in a row up. And you can see on Monday doing a little bit of a retrace, but what a move here we've had in this market. And again, it continues to be concentrated at the top. We did have the FOMC Wednesday, and you're going to see we did have a pretty good dump. Powell was definitely on the hawkish side, kind of shooting down the idea of a March rate cut. And it looks like the May rate cut is more kind of 50-50 right now, although it's starting to point towards that being not a thing. And if we look at the 30-year yield right now, take a look here. This is Monday, and we are up 2.63% on the TYX, TNX. That's a 10-year up 3%. So working back near that 4.2 area. And again, I've been kind of on this drum here that I don't really think yields are going to go all that much lower here, and we're seeing them start to inch back up, and perhaps inflation starting to come back a little bit. But markets are not really bothered by it right now, and there's a couple of keys that I'm watching. One of them is really, you got to look at some of the major players here. Obviously, big tech. We saw. Look at these moves in Meta, right? I mean, 20% move for $1 trillion company in a single day on earnings. But two of the keys I'm watching, SMCI, take a look at this, up another 12% today, and NVIDIA up another 4%. Remember, this is a $1.5 trillion company at this point. It probably just added about 10 SMCIs in the last week or so. But in any case, these two names here, as long as these in the semis, the SMH, are still pumping, it's going to be hard for the market to come down. Why do I say that? Well, these stocks are kind of like the new Tesla, remember? So Tesla has always been kind of a good gauge for risk appetite, but Tesla is out of the Mag 7 now. It is no longer, they're calling it the Fab 5 now, or whatever the new name is for it. But you got to look at these high flyers here, and I think that this market's not really ready to pull back unless those names come in, and that would be a signal that risk appetite is kind of coming back. Now, another thing that I'm going to tie into that, and I'm not really hearing anybody talk about this, but I think a lot of this has to do with China. So if we take a look here, obviously it's no secret the Shanghai has been under a lot of pressure, but some investors are paying 20% premium to move into Japanese stocks or either in NASDAQ stocks. If you take a look here, the Shanghai, another pretty good hit in the overnight last night, although it did come way off the lows again, and on pretty good volume. Also the Hang Seng trying to work on a higher low here. I think if that does happen, you may see some of this money come out of tech. Why do I say that? Well, we're basically seeing panic buying, right, from Chinese investors. And they're paying, like I said, 15 to 20% premium to move their money out of the country. That just screams panic to me. Where are they moving it into? Of course, the NASDAQ 100. Why do I say that? Take a look at what happened last week. The spiders here came down very sharply on the FOMC, and we had a gap up the next day. How did we gap up? Well, you got money coming in the overnight. Take a look at stocks like, again, SMCI. Look at all these gaps here. Gap up, gap up, gap up, gap up today. NVIDIA, no different here. Look at these gaps. Gap, 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 gap. Someone's bidding this up here in the overnight. And I don't think it's just U.S. investors. I think there's a lot of foreign money coming into the market here. But it's coming into just a high concentration, or I should say a low concentration, small concentration of stocks, right? We just talked about Meta, just unbelievable moves here, but it makes sense, right? If the IWM here, which was red last Friday, and is red today, even as the spiders were surging on Friday and Thursday, if that money's not going in there and the market is up, it's got to be going somewhere else. So all this money that would be going into kind of broad sectors, the Russell 2000, or really anywhere else, is all just going into that not even the Mag 7 anymore. It's the Fab 5. I mean, I think they definitely kicked out Tesla. Google had a pretty good dump on earnings as well. It's still holding up okay, but really right now it's just Amazon, Microsoft, Apple, NVIDIA, and of course Meta. So in any case here, just a couple of things here to kind of consider. I think this market wants to hold up as long as some of those risk-on names stay risk-on. But I would say look for China too. If the Shanghai starts to bottom, if they can finally get its footing, maybe that could cause a little bit of a reprieve, or I should say not reprieve, but money flow out of the U.S., or at least discontinued money flow, rather. But I do think that is related, and not a lot of people are talking about that. And a lot of people are baffled. I mean, take a look at the dollar index, right? Dollar popping hard today, up another 0.5%. Look at the move on Friday. This is a massive outside move. Again, we've been talking about 104.35 as a level for the DXY to get up to, and that's exceeded that right now. And again, big move on Friday. Markets up as well. So markets are defying gravity. I think a lot of it has to do with China. But right now, it does look like they want that 5,000 SPX handle. We're not really that far off. We may need to consolidate a little bit further. But really, until we get a high volume reversal, and we had a high volume reversal last Wednesday. Take a look at the spiders with the volume there, but no follow through. But until we get another one with follow through, I think this market can and will push higher. And at this point, I mean, it does want that 5 handle. We're not that far away. So that's kind of where I think we're at this point. If we do start to fade down, flipping back to the SPX, if we do start to fade down, I expect 47.90 to be major support. So that would be your level to watch there on the downside if we do start to correct more. For the Qs here, again, right into this area here, 410, 412, 413 area is your support. I do have a kind of a mathematical level around 442 if we were to get up there, but that's really all I see right at the moment, as we are kind of essentially at an all-time high on the NASDAQ 100 there. IWM, again, still on the weaker side, and again, the dead horse has been beaten, right? I mean, we get it. You know, the breadth is poor. Again, you're seeing the Russell 2000 come off the lows today, but again, now back below the 50 moving average. Could it inch up into the close and close above that? It certainly could. But still, 197.50 is still resistance. And forget about all-time highs. This is not even at 52-week highs. And I mean, it's still in a bear market, still 20% off the highs. Again, the dead horse has been beaten, but that's just the reality of the situation right now. The diamond here via the Dow, down 0.75% today, but it had a good all-time high close on Friday. You know, next level I've got for this is around 390, and that's again, that's just a mathematical level. That's not like any sort of obviously it's not any sort of, you know, supply zone, because it, you know, it would be an all-time high, but that's what I've got worked out for that. If we do come down, there's a little support at 377, and then the big level at 370 right there. SMH here again, so continuing higher. We did have a good reversal 2 weeks ago with that tail candle with volume, but again, no follow through. Again, semis are extended, they're overbought. You know, anything you want to say, they're that, but I still think this can go up to pierce 200. I definitely would not rule that out for the SOX. This is a little bit on the weaker side. Remember, SOX doesn't have NVIDIA as high of a weighting in it, but we'll just say 4,600 would be your kind of psychological resistance on the upside there. IGV still holding up well. This has not really participated the last week or two, but as far as the charts are concerned, it's fine. There's no real problems here, and this can still get to, you got a level at 440, and then past that is double top. If we start to fade, we look to 410 on the downside. All right, Dow transports were all over the map last week. They actually broke down, or started to break down a little bit, but they did recover by the end of the week, and now putting kind of an inside candle here in today. So transport's hanging in there okay. I do think the jets look all right for a potential move. I do like this kind of weekly pattern, so maybe the airlines can get one more push into the, I would say, the 20 to 21 handle. But transport's definitely coming back a little bit and firming up. But again, still, well off 52-week highs, well off of all-time highs as well. All right, let's flip back over here. We'll talk rates. So I did touch on that obviously a little bit a minute ago, but you're gonna see here the 2-year big outside move. I told you guys don't expect this to get much past 410, 415, and pretty good pop there. You could make a case that you just triggered an inverse head and shoulders with today's price action too. So nice that we're actually doing this video on Monday, because that we could talk about that right now. And yeah, that would give you about a 30-point move to the upside. So we'd be looking at 470. So that would take you up to this red bar high, 470. We'll say 475 to call it even. There is a little resistance at 460 as well, but 2-year looks to be moving up. You got the 100 and 200 moving average right up there in that area. So that could be a magnet for the 2-year over the next couple of weeks. 5s also higher high here. Right, again, went to the yellow line. So we've been talking about that line for a while. We finally got down there, and then a really good bid off of that. So 5-year here, we'll just say 4.4 to 4.45. And then the 10-year, again, higher low, not above these highs yet, but good move here. 4.35 is going to be resistance, and then up through that, you can get to 4.6. 30-year, again, below this high, but if you get through that, you got 4.6 and then 4.75. So again, yields firming up here. And again, this whole idea that the Fed's going to start slashing rates is starting to blow up a little bit here. But again, market's not really bothered by it. Again, my kind of thought process is that a lot of this has to do with, foreign money coming into the U.S., at least not necessarily all of it, but I do think it is, does make up a big chunk of it. Anyway, XHB here. Inside day today, this is still fine. Bigger picture, it's just consolidating here on the weekly. I still think it needs to do more of that if it's going to move higher here. But pattern-wise, there's no real problems. We'll leave it alone for now. VNQ is a little bit on the softer side today. They did save the inside bar pattern on the weekly close last week. Today, we're below that. If we close below this on Friday, that would be a big negative for VNQ. So just keep that in mind. Right now, it's hanging in there okay, but or I should say, right now it's below that line, but if we close back above it, it's fine. XLF, that pulled back a little bit today here, but again, still above that 38.25 area. I still think that can get up to 40. KRE is interesting. So KRE was under a ton of pressure on Wednesday. It was down almost 6% at one point, and the market did not even care. Why didn't that market care? I think that it's sick and twisted as it is. If regional banks fail, that means more liquidity. And then I think that's really that simple. In fact, the market was able to rally back very sharp. I should say that was on Thursday, rather. This was the FOMC. This was Thursday, and this was Friday. So if we look at the spiders were bright green on Thursday, even with the KRE down. So pretty remarkable move here. Any way you look at it, but and there's the KBE as well. So same kind of thing, but regional banks definitely coming under pressure. BTFP does run out in March, and so does reverse repo. So maybe some fireworks coming down the pipe here, but market right now is not too bothered by it. Broker dealers also just consolidating and chopping around here, testing the 50 moving average. No real problems with this. It just needs to work off an overbought condition. All right, flipping over to commodities. So take a look at crude. So crude did back off pretty sharply, and that's even with rates moving up last week. So it looks like them CTAs got a little bit of control back in the crude market. But I did extend these trend lines out, and you're going to see we are getting a bounce here. I don't love the weekly candle, so I don't like that engulfing candle there on the weekly. But I do think crude gets a bounce here at the very least. Also, if rates really start to push up, I think that would be a tailwind. But right now, definitely not the greatest price action for oil. I don't see a ton of downside, even if we do start to come back down to the lows. But right now, definitely a good reversal there on the weekly. I do think it can at least retest 75, maybe even 77 if it can get going. Well, pretty good level there for crude, and it is getting a bounce as we speak here. XLE also holding up okay. And here's your positive for oil. You see the producers are acting well. So we put in a pivot low at 79, and we have not really rolled over. We're actually just kind of going sideways, which is, you can make a case this is a consolidation pattern. If it firms up more, it can go higher. So the producers are looking a little bit more firm. XOP a little bit on the softer side, but again, potential higher low there in place. And the one I like, OIH, have traded in and out of this, actually bought a little bit more today near the lows. I do think this has very minimal downside here in the near term. So I think the producers are kind of your positive tailwind there for oil. It's telling us that investors are willing to take on risk, but definitely a weak showing last week for oil. It did get a bounce up today, obviously with more geopolitical tensions in the Middle East, but we'll see if that level holds again. Short term, we'll look at that 75 handle on crude futures. CCJ here, another big week here, up move. Little pullback here to the 20, but take a look. Good pattern. So there's really nothing wrong with this. If this just consolidates more, it's going to go higher. Uranium's on fire. URNM's on fire. We talked about the 20 moving average last week. We got a bit off of that, made a higher high. So uranium continues to act well there, although it is pulling back a little bit today. Nat gas here, pretty much a flat week. There is a giant gap here. Again, that is a contract gap, so don't make too much out of that. The price isn't really down all that much. I think this may need to pierce 2, and then we'll look at it from there. Honestly, I don't like it when you get these big contract gaps because it skews the chart up so much, but I will say you're basically you know, this is about as low as it gets. If you look historically, it doesn't get much below $2 typically. So we'll see what kind of pattern it puts in here. It may want to go test a Pierce of 2 here. I do think it is a little overdone to the downside right now, but I'm just leaving it alone at the moment. Dollar index, which we touched on a little bit here, that got into the 104.35 handle, actually overshot, got to 104. What did we get to? 104.60. If this can firm up and hold these gains, this can go higher. And I also want to take a look at the dollar yen too. A lot of people have forgotten about this, or nobody cares anymore, I guess. But dollar yen is firming back up, and I think that can go to 150. We'll see if the market cares at some point. But I mean, at some point, obviously, the market eventually will have to care about yields in the dollar. But obviously, right now, it's not doing that. But 104.50, good tag for the 104.60 rather, good tag for the dollar. That is pulling back gold, as is yields. We talked about this. I think precious metals are going to grind out for the first quarter because I think yields are going higher, and that's kind of what's happening. Although gold is, to its credit, with yields, higher, it's really not down all that much, right? I mean, here you put in that high around in December. We put in a lower high here, but it's not really that far off the highs. Considering TNX has been kind of, putting in a higher low here, and considering the dollar index has been bidding up since the end of the year, last year. So pretty impressive showing for gold. Again, a lot of that's likely geopolitical tensions and so on and so forth, but nothing terrible there for gold. It still looks fine on the bigger patterns, bigger time frames. Silver here down 1.5 today. I think that needs to go down and test 21.50. I think that would be a pretty good buy level, at least for a bounce. But silver definitely a little bit on the weaker side comparatively. Platinum fractionally higher today. It did have a little bit of a pullback week, but nothing terrible there. I don't really see a ton of downside for that. And the same thing with palladium. I don't see much downside for that either. Copper did pull back pretty sharply. Watch this. You could put in a head and shoulders here if we close below this white trend line here. So watch copper. If that triggers, that should take us back down to the lows here. But right now, pull back there, and we won't make too much more out of that. Bitcoin here still holding up. So just hanging around. You actually have a decent, I guess it's not really the best, but you have a little micro kind of bull flag there. There is a lot of supply here with this red bar. So that's why it's stalling out here. But again, you guys know what I'm going to say. If we just go to the weekly, you're going to see this pattern is fine. There's nothing wrong with that. And the 20 MA is catching up too. So the only thing that negates that is a close below this green bar, which is at 39,983. Spot 29. We close below that, then I get concerned with Bitcoin. But until that, it's fine here. I wouldn't, I'm not bullish. I'm not bearish. I'm giving it the upside bias though. All right, again. So lastly, again, spiders here. Market's having a really good week. I do think we go test 5K at the very minimum. Again, watch those high flyers, SMCI, NVIDIA. If they start to dump out, that's going to, be a sign here that risk appetite is starting to wane. Again, breadth is absolutely abysmal right now, but they can keep pumping this up, and until we get a high volume reversal with follow through, it's going to be hard for this market to come down. Again, watch China too. I think if China bottoms, which honestly we're seeing kind of panic right now, which I think means we could be kind of close to a bottom. That could also mean not saying that tons of money comes out of U.S. markets, but maybe less money starts, coming in and, bidding up these FOMO names like Meta and so on and so forth. So anyways, guys, going to wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you guys all next week.